G'day traders. Well, we're coming into the end of the week at the moment, and we are seeing some meaningful market moves and some big market moves. Let's start off with the commodity space. So yesterday we got a surprise headline, and that headline was with respect to Iran wanting to negotiate a nuclear deal if all the sanctions against Iran were lifted. So that was a huge surprise. We also heard from Trump that he thinks he is close to a deal with Iran. Again, surprised that all of this is happening so fast. So anyway, if those sanctions were lifted off Iran, obviously that would mean that a lot of Iranian oil would flow back into the market. That increase in supply would obviously weigh on the oil price. So as soon as those headlines came out, we did see crude get hit a few percent. Now, there are actually some top-level talks happening at the moment, also with Ukraine and Russia and the US, obviously trying to end the war in Ukraine. Look, no one expects any sort of peace deal to be done in the short term, but certainly there could be potentially maybe an extended ceasefire. But look, any sort of positive headlines from there as well. Maybe the market will start, pricing in that, Russian oil might start flowing again more freely, again weighing on oil. The bottom line is that we are coming into the weekend, which means you have gap risk. So I would suggest that, for the sake of potentially some more positive headlines coming out, not going mega long crude into the weekend with that gap risk, because it could be a gap lower on Monday. And yes, buyers at the moment, I imagine for the market at the moment is selling, being short crude, selling any sort of strength in the short term. Moving along to gold. Gold has been easily the most volatile market, and that's saying a lot because a lot of the markets have been super volatile. In the last week or so, we have seen a big sell-off in gold, and that's obviously been what's happened because one of the biggest drivers for gold has been the high tariffs and potential trade wars and the uncertainty with that. So now we're seeing the opposite of that with trade deals being done, potential deals with China, a lot of positive headlines there. So yes, gold has been sold off aggressively. Yesterday in Asia, we did open around about that 31.80 area. It did sell off $60 down and made a low of 31.20. However, we did see a huge spike in gold from 31.20. It went one way and went up $120 and closed around about the 32.40 area. Look, seeing those sort of swings, $60 down, $120 up, $200, basically, $200 swings in gold, up and down. This is not normal stuff. Sometimes it takes months and months to see 100 plus ranges in gold. But we're seeing this on a daily basis. Now look, that rally in gold from the lows, there were no headlines at all. So there was no event or anything that came out. But look, if we take a step back, gold did sell off from 3,500 highs, those record highs, down to 3,100. So it sold off $400 in a short space of time. So at some point, you would imagine there would be a retracement. So obviously, what happened yesterday is that we found some solid support. So that 3,100 area, 3,120, obviously buyers are sitting there. Now, top side, yes, technically we are close to some resistance again, around that 32, 60, 70 area. So I'd imagine that's probably the short-term range, from 31.20 up to that 32.70 area. And so yes, I'd sort of be playing that range. And buyers still selling rallies because at the moment, as we just discussed, one of the biggest drivers of gold is not there driving gold higher anymore. And also there's a few other things in play as well, is that we do have higher bond yields, we do have a stronger US dollar that's weighing on gold, and the market has priced out a lot of the recession risks. Okay, so moving along, something we just mentioned, the bond market, that certainly is worth talking about. In the last couple of weeks, we have seen a huge spike in US bond yields, where we've seen US 2 yields back above 4%, we've seen 10-year yields up around 4.5 plus, and 30-year yields, up at 5%. So these are at multi-month highs, and they're also going towards, dangerous levels where, those bond yields, potentially could start breaking stuff. Higher bond yields certainly are, a big negative, not just to the markets, but obviously to the economy in general. Look, they did ease a little bit off those highs that we made that I just mentioned last night, but certainly, if you are actively trading, you need to keep an eye on these, because if they continue to spike, and especially if US 10-year yields go up to 4.8 or even up towards 5%, I would definitely, I can say with a lot of confidence that you are going to see a lot of risk-off trading. So again, keep an eye on bond yields, because at the moment they certainly have been on a mission. Look, the equity space is still in a happy space. Obviously S&P, NASDAQ and equities in general are still at elevated levels. But at the moment, yes, the next leg higher is pretty much to go up to record highs. A lot of positivity has been priced into equities, so not sure I would be chasing equities fresh long here at the moment. Bias is probably buying dips, and buying dips always works. So at the moment, we've seen the equity market rally stall somewhat. Other than that, look, this weekend, going into Friday night, there is not much with respect to event risk or big economic data that comes out. But we've got a headline that is certainly very, very much headline driven, and obviously very headline driven by Trump. Very hard to say when those headlines are going to drop, but certainly we are getting them on a daily basis. So, keep an eye on your screens and for headlines, because they are driving them. And just be careful, obviously, going to the weekend. There is a gap risk for Monday, and those gap risks that we've seen recently have been pretty nasty. All right, good luck for the end of the week, and we'll catch back in with you next week.